how to build a winning Forex trading plan. What's going on, guys? It is your boy Mutupi. I'm glad that you're watching this video that will be helping you in terms of being able to build a winning Forex trading plan in a step-by-step form. So understand that on the previous videos, we broke down some of the 5 habits that were able to just give you some insights on how these profitable traders are able to gain consistent profits. So what we decided to do now is to be able to just create a young series that will enlighten you and allow you to be able to learn more about each habit, but in a much more detailed form. So what we have here in front of us is a nice presentation that will be able to walk you through so that you are able to have much more deeper information and be able to apply it much properly. So the one thing that you need to do is that right now, stand up, get a piece of pen and as well a pad, just so you're able to take down notes, because this is going to be one of those valuable lessons that you are going to be coming across on YouTube. And one thing that I need you guys to do as well is to make sure that you have subscribed to my YouTube channel. And let's get started, guys. So in today's video, we are going to be speaking about how to build a winning Forex trading plan, and it's going to be much more in a step-by-step form. What is a trading plan and why do you need it? A trading plan is like a blueprint for your trades. It removes emotions and helps you stay consistent. So I want us to understand a bit more on why do traders fail without one. They experience things such as overtrading, revenge trading, taking random trades based on emotions, no risk management. So ultimately, a trading plan gives you structure, keeps your losses small, and helps you scale profits over time. So right now, I want us to speak about some of the key components of a trading plan. So the first thing is objectives and some trading goals that you have. What are you aiming for? Are you aiming for consistent profits? Are you aiming to grow your capital? Or are you aiming to just achieve some learning disciplines? Define your short-term and as well long-term goals. Example, grow your account by 5% a month, whether it's 10%, whether it's 20%, or maybe it's to make a specific amount of money. Like I remember me back in the olden days, I had a monetary value and my goal was to make at least 10 million from trading, and that is what I had in terms of my trading plan. So you can go about defining what your short-term goal is, which could be a monetary value, and as well what your long-term goal is, which is what is the percentage that you're looking to achieve while trading. The second thing is going to be your trading strategy, your entry and exit rules. So the first thing is, what's your strategy? Is it breakout? Is it order blocks? Is it supply? Is it demand? Is it SMC? Is it patterns? Is it advanced patterns? Is it continuation? Whatever, what strategy are you going to be implementing in that trading plan? Then followed by that is going to be you having to define your entry and your exit. Example, I enter trades when price touches a strong order block with confirmation on the lower time frame. That could be your exact same entry criteria, which allows you to be able to understand what actually makes you enter. And when it comes to your exit criteria, it's going to be something like, once trade moves in my direction, I'm going to lock in profits as soon as every candlestick closes that moves into my direction. Or it could be something as simple as, when you have that stop loss be at that level that you've put, you don't move it, because I see a lot of people out there moving stop loss just because they feel like a trade is still going to play out. So that automatically breaks your trading plan. It breaks the disciplines that you have when it comes to your trading plans. And the next point that we are going to be looking at is risk management rules. The max risk per trade. Example, never risk more than 1 or 2% per trade. And as well, in this trading plan, you'd also be able to give more information, such as if you do happen 1% per trade, and you took a negative on it, you'd be able to reduce risk, meaning that on the next trades that you take, you can reduce risk and start risking 0.5%, meaning that you're risking 0.50% up until you are back into being profitable. That is one of the best ways that you can preserve your capital. The next point is stop loss and take profit strategy. Is it fixed or is it dynamic? Is it in a way whereby your stop loss is going to be strictly 20 pips, you don't care whatever the reason is and stuff? Or is your stop loss going to be more technical based? Are you going to be using technicalities in terms of being able to put your stop loss? Because I understand there's people out there that trade and they are not comfortable with having 10 pips stop loss or 15 pips, but they would rather be having a fixed stop loss like 20 pips regardless of whatever that happens. But for people like us, I'm trying to just enter at the rightest moment, because I understand that if the market, even if I have an 8 pip stop loss, I understand that the market should not be able to retrace and get back to that area. So no matter what, I try to at least limit, my risk potentials, and I try to increase my reward. And one of the things that we look at is the max drawdown per day or per week. Example is, if I lose 3 trades in a row, I stop trading for the day. These are exactly the same principles that I had whenever I would have like 3 losing trades in a specific day. I stop trading for a day. So if I have 2 losing trades, I know that so far I'm negative 2%, but the next trade I'm just going to reduce the risk to 0.75, meaning that if I lose the trade again for the day, I'm going to be at 2.75%. But if the trade goes into direction, maybe it gives me 3x, I understand that with that already I'll bring back some of the profits that I would have lost from the trades, and then I'm back at break even, and then from there I'll be able to just try to work my way up. So that is one of the best things that you can do, being able to know what's going to stop you from trading, what's going to be able to allow you to decrease your lot size, because the more you lose, the more you take in negatives. You need to decrease your lots and not increase. Most people increase their lot size when they are able to lose money, which is the worst way to trade. The fourth thing that we are going to be looking at as a component is trade management and journaling. How will you review your trades? What are you going to be saying as soon as the trade is done? You document down how you felt before, you document down how you're feeling after, and then you also give down the review of how you felt during the trade. Example, using a trading journal or a Notion template to track what works and what doesn't. I've got a Notion template. At first, I used to have a huge, big template that was like as thick as this, but now because of digital things, I was able to put that down on a Notion template. But the best thing that I also do have is we have a template that we've been able to create because of all these years. I just didn't want to go back to creating a new one. All I did was now have to improve it. So that's the things that you can do. What journaling systems are you going to be using? What works and what doesn't, to be able to just see how you can fully capitalize. One thing that I like is that winning traders don't just take trades, they track their performance. So now let us speak a bit more about how to create your own trading plan in a step-by-step guide. Now that you know what should be in your trading plan, let's build yours together. The first thing is to write down your strategy in details. Example, I trade London breakout with confirmation on the 15-minute chart. So you're able to write it down in details. London breakout strategy with confirmation on the 15-minute. That's a simple, detailed example of a strategy. The second thing is to define your entry and as well exit rules. For example, I enter after a 5-minute candle close above resistance with a 1:3 risk to reward. That is super specific. You can see everything is vivid, clear. The third thing is you need to set your risk management rule. Guys, this is very important. For example, max risk per trade is 1%, max loss per day is 3%, take profit is at 1:2 risk to reward, meaning that if you are able to risk 1%, for every profit that you're going to be gaining is going to be 2%. So that's just how you play around with creating a strategy, in terms of you are able to also know what the risk reward is, what is the maximum loss per day, and as well your maximum loss per trade. This will allow you to be able to trade with confidence, because this way you are going to remove emotions out of this, but you're having something that is vivid, clear, that you can work with. And then the fourth thing is to now decide on trade review and improvement process. Example, I will journal every trade and review it each and every Sunday. That's just how you'd be able to just sit down and say each and every time after I've placed my trades. It could be once daily, meaning that after a trading session. It could be every Sunday. It depends, but you need to do this as often as possible, so you are able to see some mistakes and you are able to fix those mistakes. Once you write this down, your job is to follow it every single day. That's one of the best things that I love about trading plans, is because of the fact that now that you've got a plan, you know what's expected of you in the markets. The only thing is to just follow through with that trading plan each and every single day. And eventually, if you're not getting the results that you want, it means that you need to change your trading plan. You need to update it somewhere. You need to see with your reviews, your tracking, your journaling, what doesn't work, and then you need to remove that a bit and then focus on evolving that. So now I want us to speak about some of the common mistakes that you need to avoid. Don't keep changing your plan after a few losses. Stick with it and analyze long-term results. Most people, after they get 2-3 losses, they feel like their plan is not working. They want to change and follow someone else's plan. But that is one of the worst things that you can do. You need to be able to have enough results to be able to keep track of if it is working or not. The second thing is don't ignore risk management. Trading is about staying in the game long enough to win. I hate it when people come to me and say that they've blew an account, and I ask myself, how do you blow an account when there's things like risk management strategies out there that you can implement in order to be able to just stay longer in the game. Because truly speaking, guys, once you blow your account and you don't have a trading account anymore, you are no longer a trader. You know, it's clear like that. You are no longer a trader. So the best thing to still remain a trader is to obviously be able to stay long in the game. And the best way to stay long in the game is to preserve your capital by following through with your trading plan. And the third thing is, don't copy someone else's plan blindly. Adapt it to your own trading style. Don't just see this person doing this and try to copy or model what they're doing without even knowing why. The only thing that you need to do is you can take inspiration from it, but be able to just adapt it into your own style so that this is now your own plan. And one thing that I like is that a great trading plan is useless if you don't follow it. Discipline is what makes traders profitable over time. So guys, if this video helped you, I need you to drop a comment below and let me know, do you already have a trading plan, or are you actually building one? Because this is the most important thing about trading. Once you're able to have a plan, even when you come to me or you say something and say, hey man, this is what's going on, the one thing that I'm going to say is that let's see your trading plan, let's see your reviews, and then from that be able to judge you in accordance to what you have written down. But if you don't have a plan, the first thing that I know, the mistake that you are doing is not having a plan at all. And this is one of the habits of some of the profitable traders out there. So if you really want to become a profitable trader, I highly believe that you need to religiously have a plan and as well follow through on it. And as well, if you need a template, you definitely can check out our beginners package below in the description box. That is where we also have access to a trading plan that I've built, I've tested, it has changed my life. I know how valuable the trading plan is. It comes with the trading plan and as well a trading journal where you're able to write down your trades, plus as well you're able to plan through certain things. I also give you examples of how I went about being able to just implement my plan. So you can just check out the link that is down there in the description. You'll be able to just get more information on it. And for more step-by-step tutorial videos, subscribe and turn on that notification bell, because this is one of the best ways that you'd be able to just access high quality information in your hands. So make sure that you like this video, subscribe to it as well. And the last thing is that we do have a Telegram community, whereby that is where we share some of the resources that we come across, every knowledge, every valuable information that we can learn, that we can come up across. This is where you'd be able to as well follow through with a lot of things that we have going on. So just make sure that you do check the very first link in description and you'd be able to just learn more about trading. But I will see you in the next video. So in the next video that's going to be coming up, we are going to be speaking a bit more about the next habit on our 5 habits of profitable traders. So make sure that you do follow through with this series, because this is where you'd be able to just become a profitable trader once you're able to learn and as well apply these habits. I will see you in the next video.